Should you invest in Zomato IPO? This has been the question in the heads of so many investors since a few days because that has created so much hype is what we can say. That is why we are here with the video. So stay tuned till the end of the video. First we'll be discussing about the IPO details, then we'll be talking about their business model, then we'll be talking about their financial strengths, risk, and also we'll be showing you a news report in which they have kind of a major risk. And yes, finally we'll be talking about if we are personally investing in Zomato IPO and also if you should invest in Zomato IPO. Welcome back to Money Bits everyone. If you haven't subscribed to the channel, please make sure to subscribe to the channel and press the bell icon. We will be coming with so many amazing content in the future, and also thanks for watching the previous videos as well. Yes, now let's jump into the screen and see what are the IPO details of Zomato. Yes, the IPO opening date of Zomato is on July 14, 2021 and the IPO closing date is on July 16, 2021 and the face value is 1 rupee per equity share and the IPO price is between 72 rupees to 76 rupees is what we can see in the website. And also the market lot. One lot contains 195 shares and the maximum number of lots per application is 13 and the minimum amount that you should invest is 14,820 and the maximum amount for 13 lot is 1,92,660 is what we can see. And also the initiation of refund. If you haven't got the IPO, then the initiation of refund is on July 23, 2021 and the IPO listing date is on July 27, 2021 is what we can see here. Now let's jump into their business model and let's see what Zomato has to offer and also if you should invest in Zomato. Let's jump into that right now. So this has been the 27th public issue in 2021 so far, and also this is the largest IPO after 16 months after SBI card, which was valuing around rupees 10,355 crores and it was launched on March 2020. And also yes, this food delivery giant Zomato will be using their fresh issue funds for their inorganic and organic growth, and also they will be using it for their general corporate expenses as well. So we have covered the first 2 points, and the third point is Zomato is a platform where the customers and restaurant partners meet. And also if you think about food delivery or if you want food at your doorstep, yes, then the two places or the two apps that you depend upon is Zomato and Swiggy, and these are the only two options that we have in front of us right now. The customers can read and write reviews and also they can upload the videos or photos of food and also the orders, and also you can make payments while dining out at certain restaurants as well. Fourth point is Hyperpure. Hyperpure is one of their another business model in which they supply high quality ingredients to restaurant partners, and also the delivery partners who work on commission will get an extra income when they deliver this to the restaurant. So food delivery and also the Hyperpure delivery, these are the two ways in which their delivery partners can earn some good amount of money. Yes, and now we'll come to the fifth point in which it says that yes, that is the major highlight that we should talk about Zomato. According to RedSeer, it is one of the leading food service platform in India in terms of value of food sold as of March 2021, and in financial year 2021, 32.1 million average monthly active users visited this platform in India. Yes, that is actually very huge because this is showing the clientele of Zomato. As on March 2021, as I said before, this particular company is in almost all the nooks and crannies of India. So it is present in almost 525 cities of India with around 389,000 restaurants listed with around 161,000 delivery partners. Yes, again, that is also shows the extensive network of the company. Then we'll be finally coming up to the point. Okay, it's about their mobile application. Zomato's mobile application is the most downloaded food and drinks application in India in each of the last three fiscal years since financial year 2019 to financial year 2021 on iOS App Store and Google Play combined as per App Annie's estimate. Yes, now we have covered almost all the business model or their business ideas, and now we will jump into their strengths and strategies. So looking into the strengths and strategies, yes, as I said before, it has a widespread, efficient, on-demand, hyper-local delivery network. And yes, again, Zomato, looking at the second point, you can read it out, but I'll explain it to you. So Zomato is an application where the services of different application has been amalgamated, and in one application, Zomato, in that particular application, you will be getting so many services that has been provided by so many other companies. So it is a all-in-one application is what we can read from this. This company is a technology-first organization. Okay, they have deployed artificial intelligence, machine learning, and deep data science to their company so that their customers, community of customers, delivery partners, and restaurants will benefit from that. Then the fourth point, Zomato is a strong customer brand recognized across the length and breadth of India. As I said before, yeah, the same thing. Now let's look into their long-term growth strategies. Yes, the three ways in which they are planning to generate their revenue is through food delivery, dining out, and hyperpure. Yes, they are going to expand and strengthen their community with that. And looking at the second point, we can see that it will invest in new products, technologies, and features for the benefit of its customers, and also is planning to invest to build a strong customer brand recognized across India. And now we'll be looking into the financials. Yes, whenever we think about an IPO, we have the first two things that we consider as the fundamentals and the financials. Looking at the fundamentals, yes, Zomato is actually a dependable company, but when it comes to financials, yes, this is the most pathetic part about Zomato. As you can see here, in financial year 2019, the operating revenue was 1,312 crore, and in financial year 2020, it was 2,604 crores, and the total expenses in financial year 2019 was 3,598 crores, and in financial year 2020, it has gone up to 5,006 crores. And now we'll look into the law statements. Okay, looking into the law statement, we can see that in financial year 2019, they lost almost 1,001.5 crore, and in financial year 2020, they lost 2,385 crores. And also looking into the financial quarter March 2021, the food delivery company posted a consolidated loss of 816 crores. Yes, comparing the previous years, their loss is less because their revenue was also less because of the pandemic. So as you can see here, against a loss of 2,385.6 crores in the previous year, revenue from operations during the same period fell to rupees 1,993.78 crore from 2,604.73 crore, as there was an impact of COVID, as I said before. Now let's look into the concern. Yes, the NRA, National Restaurant Association of India, on July 1st moved the CCI highlighting anti-competitive practices by Zomato and Swiggy. So since they don't want any other competitors, they are forcing the restaurants to provide discounts, and also they are, yes, again look into that, deep discounting, including forcing the restaurant partners to give discounts to maintain appropriate listing. Yes, that is not fair again. And also data masking, bundling of services, exorbitant commissions charged, price parity agreements, etc. So this is actually something that we cannot agree upon. And also before that, we'll have to look into a news report. Yes, looking into the news report, yes, we'll put the link to this particular news article in the description. You can read more about that there. Several city restaurants and cafes are now looking at an alternative to food delivery provider Zomato and Swiggy, since these applications have been charging high commissions from owners who also have to bear other additional costs for customers. The hoteliers are looking to deliver food themselves or use services of normal courier apps. So now the members claim that Zomato and Swiggy take around 30 to 40% of the total cost of the food ordered by customers, and if they put their own delivery partners, then that will go down to 5 to 10%. Yes, that is also if the hotel organizations are coming together, and if they are making their own delivery partners, then for sure Zomato and Swiggy will get a hit from that. That is another major risk. Now looking at the second thing, some restaurants has disagreed with their discount terms and they have logged out, and also if they couldn't keep the number of restaurants they have right now, and also if the number of restaurants are diminishing, then the business will also decrease, and thus their revenue will also decrease. So under the campaign, yes, there is another campaign that has happened in Twitter. Under the campaign, which was started in August 2019 against Zomato's gold subscription program, as many as 300 restaurants has started a Twitter campaign to announce their delisting from platforms such as Zomato Gold, Easy Diner, Dines Out, Government Passport, Nearby, Magic Pin, among others. Okay, the company in its DRHP also cited the 2019 policy on penalties on restaurants for delayed orders, which was rolled back based on the feedback. Yes, they were charging penalties when the customer gives a negative review, right? Yes, and the major concern, that is the fourth point, the entry of a third player. So Amazon has been testing waters and they are planning to come into the market. So if Amazon is coming into the market, then you can read it down here. They won't be looking at the 4 to 5% market share, but they will be forecasting a 10 to 15% market share. And if Amazon is coming in, yes, then again Zomato and Swiggy will get a huge hit. Coming to the sixth point, we can see that tier 2 and tier 3 are the markets. Okay, tier 2 and tier 3 are the markets where the order frequency is low and also the order value is low. So due to the above concern, so Zomato is currently looking at a 25 to 30% growth, and in the coming years it will be going down to 10 to 15% is what we can learn from here. Yes. Now let's just get back to the IPO details and we can affirm it once more. Again, IPO opening date is on 14th, closing date is on 16th, and in their fresh issue they are going to raise an amount of 9,375 Indian rupees, and out of 9,375 crores, 375 crore is offer for sale by Info Edge. So Info Edge is selling their shares worth 375 crores is what we can read here. Yes, and also finally we have to look into the share trade at a 26% premium in grey market ahead of the issue. So in the grey market, Zomato is having actually a good demand. So now we will tell you if we are personally investing or if you should invest in Zomato. Since there is a 26% premium in grey market ahead of the IPO, we can say that Zomato is actually good for the listing gains. So if you are focusing in listing gains, then yes, Zomato might give you a very good returns. By saying this, I think we have covered almost all the dimensions of Zomato. And yes, thanks for watching. If you haven't subscribed to the channel, please make sure to subscribe. We will be coming up with so many amazing content in the future. And also, again, thanks for watching and bye.